What's up everyone, it's Scotty with MoneyVest. So I just got a new microphone, so I really hope the audio is going to be more clean and more crisp in our videos moving forward. And again, I hope you all are doing great. Markets are certainly not, as they continue to sell off almost every day. This week, the markets have been down quite aggressively. The S&P 500 is down a little bit over 2% this past week, and the NASDAQ here also selling off over 3.6% this week. So this was the first week in about 5 weeks that we've seen a bit of a red in the markets, which again is not unusual, something that we were expecting and we were sort of calling for it, considering how overextended and overbought the markets were. And again, the volatility being extremely low, trading at really rare levels at close to 11 to 12. This was coming. So this is not a huge surprise. This is something that we can take as an opportunity because there are going to be better deals and discounts coming our way. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you haven't already. We're trying to get to at least 100,000 subscribers by the end of this year. So help us hit that target. Also share this video with your family and friends if you really do enjoy these videos. I would really appreciate that. And I also do want to mention, connect with me on Instagram. My handle is going to be CASWRP, where you can connect with me there. I actually posted a story recently talking a little bit about a message that I received, which again was a very amazing and heartfelt message. Person reached out saying that just reaching out to say your content is amazing. I've learned so much. Thank you for doing what you do. I think you offer the most quote unquote sensible investment advice across all creators on YouTube. So thank you. And again, none of this is financial or investment advice at the end of the day. So I'm really just sharing my experiences and my learnings on this platform. And I've promised you guys to never take any sponsorships or never push you to any type of service or any type of platform which I believe is not going to offer up any value. So whatever I'm putting my name on is going to be vetted by me and my team rigorously to better understand what it is that they're offering, and only present it to you guys if I actually believe it's going to add more value. Because of course I was never a part of the FTX sponsorship, because even they reached out to me, and everybody does, most sponsorships do, but it's just that I'm not interested in any of that, because I know the most value that you're going to get is from better and high quality content, and to better understand how the markets are doing, and of course make better, more confident investment decisions. That's why I'm here, and that's what my purpose is with this channel. So again, thank you so much, really appreciate it. And there is again going to be a 51% discount. So this video is sponsored by MoneyVest. So if you want to join our MoneyVest platform, we're working on including a macro dashboard where you can access all the earnings and economic calendars, as well as our MoneyVest index, as well as fundamental technical positioning of the market and the market thresholds as well. So this right here is going to be the entire platform. 51% discount expires at the end of this month. So you can take advantage of it while it's still here, and again do your full comprehensive analysis on the markets. So NASDAQ here down over 81 basis points, selling off again quite aggressively from 17,900, closing in at 17,726. S&P 500 down about 70 basis points as well, and the Dow Jones down almost 1% on the day. So most stocks here selling off aggressively for the markets, with Nvidia down 2.6, Broadcom, AMD, all these semiconductor stocks down, with the Tesla also rolling over 4% and selling off pretty aggressively ahead of its earnings next week. CrowdStrike down over 11%. I did a video on that earlier in the day talking about the IT outage, global outage based on CrowdStrike's faulty bug that they that they essentially pushed to production. And I listened to George Kurtz, his entire interview with Today. And of course, talking about how their main focus right now is to get all their customers back online. That's the main focus. They have already deployed the fix, but still there are computers, there are Windows PCs that need to be manually updated because of the simple file that was downloaded automatically because of this new content update. And they need to revert back to the previous file, which is why they need to be rebooted. And I've heard that a lot of the machines need to be fixed manually, which is going to take a lot of man hours from a lot of these companies. So not only is this a expensive fix, but it also opens the companies up to liability, to threats, cyber attacks, you name it. So this has definitely been a much bigger issue than what CrowdStrike has been. CrowdStrike has only gotten away with an 11% sell-off. From what I've learned and from what I've seen and heard, I wouldn't be surprised if it actually does turn into something much bigger than that for the company, as there's potential fines and liability involved with this outage. Anyway, so going back over to the market, so a little bit of a sell-off in technology continues. So if you come over to the past week, so if you come over to 1 week performance, again, most of the sell-off has been targeted towards tech. So as you can see, Nvidia, Microsoft, Apple, Google, Meta, Amazon, Tesla, Broadcom, Eli Lilly, AMD, Qualcomm, Texas Instruments, Micron, mostly semiconductors, mostly big tech, large cap. That's the sector that's been affected, and other parts of the market, that's where the liquidity has gone to. And as a result, again, Dow Jones has done much better this week compared to the S&P or NASDAQ. And in fact, small caps, I think, are up on the week. So if you come over to IWM, over here, this week, IWM was up over 1.7%, although it did sell off from 226, like a $10 drop towards the last couple days, but it was still green and outperformed the NASDAQ and the S&P, and I believe the Dow Jones was also flat or slightly up, so 71 basis points higher on the week compared to the NASDAQ being down over 3%. So clear rotation out of technology over to other parts of the market, and this is very, very normal. This is something that we were expecting to begin with, because the markets needed to be brought down a little bit better as technology continues to get concentrated, and we are only really, or there was only really focus on 5-6 names in the market. So this is a good thing. This right here, again, is something that I mentioned in my previous video. So we are still within a quote-unquote dip, because we're only down between 0 and 5%. The moment it turns into a pullback is going to be somewhere between 5 to 10%, which again is possible if the index drops down to 5,100. This is the S&P 500 we're talking about. So if you come back over to the SPX, this right here is going to be the weekly time frame, and you can see that this was a red week. In the last 5 weeks here, we've seen green. This is the first week after 5 weeks that we're seeing a bit of a red, down almost 2%. Now 5,100 is going to put us roughly around here, somewhere over here. That's going to be aligned with this previous support from back in May. That's where we were, and that's going to be a reasonable correction for the market. But a more intermediate support or short-term support is actually going to be sitting at 54.40. So 54.40 down to as low as 53.30, down to as low as 52.50. So those are some key areas of support to watch for the S&P 500. But of course, the NASDAQ and S&P both in a very similar situation, where the RSI is overbought. As you can see, the RSI is coming down. The MACD also starting to roll over a little bit, with a potential to cross below the signal line, resulting in some more potential sell-off for the markets. And NASDAQ here also, again, selling off, RSI is coming down, MACD is coming down, and down over 3.6%. So I want to reiterate that all of this is good news. If you are watching this video and if you feel like your portfolio sank this past week as mine did, by the way, I didn't even show you guys how much I'm down on the day, so let me just look it up really quickly. So let me come over to my portfolio here, and I am down, wow, down quite a bit. I'm down a little bit over $10,405.28. That's how much I'm down on the day. So of course, a pretty brutal day, especially for tech, because I am a little bit more tech heavy, especially Tesla being one of my biggest positions. However, today was July 19, so I mentioned this in my Discord as well, where 3 of my calls expired in the money. So I'm going to be de-risking a little bit of my Tesla position, because my shares are going to get called away after being in the money for quite some time. I was up on those calls by over 70-80%, but I didn't get the chance to sell them and of course close them, buy them back and close them, and that ended up of course flipping back in the opposite direction. However, from the beginning, I was super comfortable with getting rid of my shares around 225, with of course the premium that I received. So that's still going to be booking a huge profit. So that's a bit of an update. Now going back over to volatility, pushing higher over 16.5 is where we're at, and again, next level is going to be closer to 18 to 20 for the VIX, all the way up to 23. And again, we're coming off of those really low levels in the 11 to 12 range for the volatility as well. So quite a bit of an increase in the VIX. Coming over to Bitcoin, so we are coming up to its resistance at around 67,000. So that right there is going to be that level to watch, all the way up to as much as 72,000 for Bitcoin, and support level is going to stay put, of course, here in the $60,000 level, all the way down to as low as $50,000 level for Bitcoin. And again, for Ether, if you come over to Ethereum, we're seeing a nice potential rally here once again. Next resistance and target is going to be at 36.64. Support level is going to stay put down at 33.37 for the volatility. Now coming over to the S&P, the Money Vest Index, down to 3.68. So it's getting better and better as days go by, and we're now starting to approach closer to 3.5. The lower we get, the better the opportunities are going to be. Always remember that we want this number to be as low as possible, because that's where the risk reward is going to be most favorable. And you know, a lot of people have mentioned in my previous videos that, Caddy, you're always bearish. Caddy, you're always looking for a market to sell off. You're always looking for market drawdowns. No, like in these types of videos, I'm actually telling you that there is opportunity. There's going to be better deals coming our way. There's going to be opportunity in the market. And for that reason, I think it's really important for us to recognize when the risk reward is good versus when it's not. And that's the whole idea behind my videos, is that, okay, if you want to buy at all-time highs, if you want to buy at overbought, overextended levels, that's totally fine. If it's part of your dollar cost averaging plan, that's totally cool if you still believe a stock is undervalued. So here's the difference, right? A stock can be undervalued despite trading at an all-time high and being extremely overbought and overextended. A stock can be super expensive despite trading at a new all-time low and being down and oversold and really, really getting sold off, right? So those are two very different things. One is looking from a fundamental standpoint. The other is looking from a technical standpoint. My approach is looking at it from a holistic overview, looking at both the fundamentals and the technicals. And if I believe a stock is overbought and trading at an expensive valuation and overbought, I would shy away from buying it, or I would shy away from buying it a lot, right? So I wouldn't be dollar cost averaging super aggressively. However, if I do believe the stock is undervalued and it's trading very, very cheaply, or it's also oversold at the same time, and there's a lot of investors sort of selling off that stock for no reason because of the entire market sell-off, then of course that would present a huge buying opportunity, and I would be a lot more aggressive. And same thing is true with the market as well. If the market, I feel, is overvalued or trading at overbought conditions, I would shy away from buying too much, and I would only buy a lot. I would be a lot more aggressive when I actually believe the markets are oversold and trading at very reasonable to attractive valuations. That's what this index allows us to do. It essentially shows us how well positioned the markets are from a risk reward standpoint. Now coming back over to the index, and I'm actually going to be recording a different, more specific and detailed technical analysis video on the Magnificent Seven and big tech. So that's going to be posted on a different video over the weekend. So that's going to help you make better investable, tradable decisions for the upcoming week. So that's going to be a detailed video in another time. But coming back over to the market, so I think it's really important for us to understand that there is a possibility for NASDAQ to drop further. I essentially showed everyone this chart. This is going to be the NASDAQ here. So this is, again, the weekly chart that we're looking at, and we're starting to roll over. Next level is really going to be down all the way to here. That's going to put us at 16,475 to a level down as much as this one. It's going to be at 15,000 points for the NASDAQ as well. The reason why this is going to be the first level to keep in mind is because that's aligned with that previous resistance. And the last time we actually were selling off, if you come over to the daily chart, this right here was a support for the NASDAQ as well. So that's going to put us down a little bit over 11% from all-time highs, a reasonable correction for the NASDAQ. And coming over to the S&P 500, same thing. The next support is going to be down at 52.60, a more precise support. It's going to put us down over 7%. Down to as much as 12.5, 12.7%. It's going to put us into a correction territory if, of course, the situation worsens from here. But RSI is coming down, the L3 banker oscillator is coming down, MACD is rolling over, so it's not a surprise. This sell-off has some ways to go before it stabilizes and before it gives us an opportunity to dollar cost average and buy back into the market. So be patient. I think it's really important to be patient, remain patient. Opportunities are coming our way. There is going to be a time when I'm going to be firing off some of those alerts because of the sell-off, because of the better and better discounts that we're seeing in the markets. So patience, and then execution, and thinking objectively, keeping your emotions aside, and understanding this happens over and over again. And this is an opportunity that I don't want you guys to miss. I really don't want you to miss this opportunity because the buying window is literally just opening up right now. And it's so clear. It will become clear. It will become clear over time as this happens over and over again. This is like a recurring cycle. The markets will continue to do this over and over again. It's just our ability to recognize that and take advantage of it. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Like I said, I'm going to be doing a full technical analysis on Magnificent 7 in another video over the weekend, going over all the technicals and all the charts. So tune in for that as well. Also do join and check out our MoneyVest platform. Includes Discord access, all the members only private videos, and all the trade alerts as well. If you want to get access to my shopping list, my buy alerts, find out exactly what I'm buying during this tech sell-off, link's going to be down below with a 51% discount available until the end of this month. And of course, the entire platform access with our macro dashboard that's going to be coming up, as well as your portfolio tracking also available in the future. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.